What's good, y'all? So today I have something very interesting for you in this course. But then I'll let you find out for yourself in the course when you pay close attention. So let's jump into it. All right, you're welcome back, everybody. So, like already know, today we are going to look at something very interesting, and this is a video you definitely want to watch because we are going to look at three things. The first one, we are going to look at how to enter a trade, how to know exactly where to enter your trade. The next one, you're going to look at where to place your stop loss and your take profit. This is going to let us know the areas in the market where our setup becomes invalidated. All right. And the last one is a basic and a simple breakdown of top-down analysis for you. Very simple to do. So let's jump straight into it. Now, the first one we are going to look at is how to pick an entry from the market. Of course, today we are not going to be using this board over here today, but just like a quick recap for those of you who might not pay attention to it the last time. All right, so the last time we talked about a line of neutrality, as you can see over here, and the behavior of buyers and sellers in the market. We made mention that the sellers are sitting on the top over here, waiting to push price down, all right, to the buyers, and the buyers are also down over here waiting to push price up. So that is exactly the same concept we are going to use on the chart right now to explain the very first concept of where to enter your trade, how to pick an entry in the market. So let's quickly jump over here and look at it. I don't know if you can see my chart very well right now, but then I think, okay, let me just change the color to something that's going to be more visible to you. So let me see tutorial. Okay, I believe this is more visible to your eye here. All right, so I'm going to use this chart to give you an example. So let's just locate a random part of it. All right, and let me just show you a typical example. I'm going to use a 15-minute time frame. That's the time frame I mostly use to enter a trade. So let me just scroll and find a random place like this. Okay, let me see. Okay, let's assume we want to use this particular region over here to pick an entry. So if we see whatever that is going on over here, right, this is a 15-minute time frame. Of course, ideally when you want to enter a trade, you definitely have to do top-down analysis, all right, before you pick a trade. The top-down analysis will help you to know the direction of the market. All right, so right now let me just use this zone to show you something, and don't forget the explanation we had last time on the line of neutrality. It's very, very, very important, right? Very, very, very important, right? So quickly, let me explain what I want to explain to you over here right now so that you could understand exactly what I want to show you. You ready? Let's dive into it. Now let's assume that you've already had your top-down analysis from the higher time frame, and you've seen that price is having higher highs. Price is bullish on a higher time frame, but then you come onto the lower time frame, you realize price was doing this. Price was coming down like this, forming a lower low, lower high on a smaller time frame. All right, this lower low, lower high on a smaller time frame, it is just a correction that is waiting for the the major move to happen. That's a bullish move. All right, okay, so when you look at this thing that is happening over here, we are currently, pay close attention to whatever I'm saying. Okay, we are currently assuming that on a higher time frame, this is actually 15-minute time frame, so we are currently assuming that on a higher time frame, say 4-hour time frame, price is already bullish, but then there is a small correction happening over here, right? So once this correction, let me just illustrate it over here. So once we see these small corrections happening on the lower time frame like this, what we are expecting is to see for price to come and break above this level over here to start forming a higher high like this. that is the moment we begin to look for entries in the market. Okay, so once price break above this level, then we begin to look for entries to the upside. That is from the lower time frame, example the 50-minute time frame over here. So we expect this to start happening, for price to keep going in the original direction, which is the bullish vibe. Okay, because I already told you from the very beginning that the whole thing we are going to focus on is the structure, which is the basic thing. All right, if that line is not visible, let me make it more bold. All right, the structure is the thing that we are going to be focusing on. The structure is very, very important. So these moves coming up and down over here, they are forming what I typically call swing highs and swing lows. And the swing highs and the swing lows are the areas that we mark on the chart as, when price bypass those areas, we refer to them as a break of structure. Now, if you've not watched the video from the beginning, you may not be able to understand all these things very well. So I highly advise you to go back and watch the videos, right? This is actually the fourth video. The videos are less than 30 minutes long, so you can just watch all of them, and get the understanding of everything. Okay, so now this break of structure over here becomes my line of neutrality. This line of neutrality, I'm not going to do anything on it. All right, I'm not going to do anything. The moment price break above here, there is nothing I'm going to do. All I have to do over here is to watch. Okay, let me bring this now. If price break above this level over here, this structure over here, all I have to do right now is to just stay put and be watching the market. All right, that is why we call it the line of neutrality. Now, what do I expect? I expect price to come down below it, just as this. Once price comes below it, let me push this one back a little bit. All right, once price comes down below it, the next thing that I expect to happen before I enter the trade is for price to come and close above this, like this. Is price to come and push above it and close above. Once it closes above, that gives me the sign that we want to continue with the bullish move. Okay, this whole thing that I'm teaching you is basically like ICC form of trading. If you know trade by side, you know how he trades. It's basically this way, like ICC. ICC just like indication, then we have correction and the continuation. ICC. Yeah, if you know trade by side, you should know this is basically how he trades, and this is exactly the same thing I'm trying to teach you over here. So you just have to pay close attention. Now, if you basically understood whatever I illustrated over here right now, let me show you on the chart over here. So right now we have this small bearish move to the downside. Now, where do we have our swing high in this particular move? I'm just going to zoom. All right, let's have this. Now, where is our swing high? Do we have a swing high over here? No, there is no typical swing high over here. All right, there is no typical swing high in all this move over here. But then where do we have our first break of structure? Guys, I have to zoom in, increase the size of this chart very well so that I could see clearly whatever that is going on the chart over here. Right, I want to see if you have a swing high over here or not. Okay, I think we have a swing high, but very, very, very tiny. You understand? Very, very tiny. And oh guys, we have a swing high over here actually. All right, we have a swing high over here, right here, this green candle. So let me label it over here. This is going to be our swing high. Increase the size of this a little bit. This right here is going to be our swing high. Now, as it is our swing high, what do we expect? As it has become our swing high, this line becomes a line of neutrality. Now you could say price first of all broke above it. That causes the what? The break of structure actually. So that is the indication, the I part of the ICC. That is the indication that price wants to go up. But then we don't have to jump into a trade at that moment. All we have to do is to wait for price to push back, and close below, take note of this, we want a price to close below this particular line of neutrality with the body of the candle. That means the sellers try to push the price down. They try to push the price back down to the buyers. So we want to see this happening. We want to see the candle close with a body below this particular line of neutrality, the level that is like the break of structure. We want to see price close below it with the body of the candle and deposit candle bodies below over here. If this thing happen with the wick of the candle, we will actually not be interested. We would have to wait for more confirmation. All right, so once that thing happens, the next thing that we want to say is for price to move above. All right, move and close above this particular line, which is a line of neutrality. We want price to close above it before we enter a trade. All right, we want price to close above it before we enter a trade. Now if you could see price close above and look at the gap, it closed above over here, and at this point, if you see this already, you start crying like, oh, I mean, the stop loss on this trade is going to be very, very big. That's almost 160 pips. That's honestly very, very big. Yes, but then would you like to tighten your stop loss that it can get hit easily, or would you like to know exactly what you are doing? Then calculate how much you want to risk on a trade depending on the number of pips that your stop loss might be. In this way, you have to work on your lot size so that you'll be able to cater for the SL in pips. Okay, all right, so but then what did we see happening over here? All right, I'm just trying to let you know the principle. What did we see happening over here? Right after price broke above this level, I mean, it broke above this level and closed over here. This is a point that you have to enter your trade. This particular area is where you have to enter your trade. All right, so if you are to enter a trade, you just pick an entry from here. All right, you pick an entry from there. The ideal place for your lot size, your stop loss, is here, just few pips below over here. And where do you have to target? Your first target has to be, all right, so from the higher time frame, this is actually going to be our high, this particular area over here. Let me just use the line to indicate it. All right, this is the high that caused the low, so this particular area is going to be our target, where we will be targeting. All right, our first target. So let's go back to the 15-minute time frame and have a look at what we were doing. Now from the higher time frame, you realize our first take profit is here. All right, so if we follow that carefully, that is going to give us a risk reward of 1:2. That is going to be a risk reward of 1:2. And mostly when it happens this way, what you do is you actually have to take some partials. Then if your first target is here, right? So whatever that is going to come after that first target is whatever you are willing to raise for. So at least you can target 1:3 or 1:4. All right, sometimes this particular setup, it delivers 1:6 risk reward ratio, but then like I said, your first target has to be at a reasonable area. That is mostly from the higher time frame, either the recent low or the recent high before the move starts happening. That is where you have to target. So if you happen to go with this, you're going to go with 1:5 risk reward ratio. Okay, anyway, that is just one thing that I've shown you. And another thing I will show you, probably not in this video but in the final video, is just one secret that I have to add to it for you, and you'll be able to understand everything perfectly. Okay, all right, so for anybody that is actually looking for a way to enter this particular trade without risking a lot in terms of the pip counts, then a person will actually come and use this level right here. I believe this is visible enough for you. Then the person will actually rely on this second breakout structure that is right here. Okay, so once this structure got broken up, the person is now saying that this is an indication for price going up, then what the person has to wait for is a correction of the price. So price has to correct, move back way below this particular level. All right, once price comes below this level, you are not expecting price to come and break this particular low over here, this swing low. If price break this swing low, that means your setup is invalidated. You don't want price to come and break below this particular swing low. All right, so once price happen to push down below this particular line of neutrality, that we expect candle bodies to be deposited over here. Now the first thing that happened over here is not enough for us to use as a benchmark to enter a trade. You could see, fine, we have some body of a candle right here, but that is not enough. There's a lot of wick around this area, and that is not what we want to see. We want to see body of candle, full body of candles below the line of neutrality. Once that is observed, or once that showed up, we then expect price to move and close above our line of neutrality, and that is exactly what happened over here. Price closed right above over here. So from that area, we are going to pick our trade. We are going to quickly hop in on a trade from here. What is the ideal place for our stop loss? If you are taking a trade from there, the ideal place for your stop loss supposed to be somewhere here. Ideally, it's supposed to be here. Remember, I made mention of the fact that if price break below this particular low, that means the setup is invalidated, right? So we want to put our stop loss at an area that will actually becomes invalidated when price happen to take it out. So our stop loss is going to be here, and as usual, our target is going to be this area. Okay, that will be our target, our initial target, before we move on to any other targets that we want to achieve at the end of the day. It could be any other target. Example 1:4. All right, 1:4 risk reward ratio, right? So I don't want to spend more time on this part. I want us to quickly look at the third thing, which is how to do a quick top-down analysis, right? So to do a top-down analysis is very simple, right? It's very simple. Let's see if we can use a current market price to just do something simple for you. I don't want the video to keep long actually, so I'll do this in less than some few minutes. All right, let's see. So let's say on a higher time frame right here, what is happening? Price is bullish. Let's use this particular level over here. We are considering this thing, all right, this aspect. What is happening over here? Price is bullish. All right, so when price is bullish, what we want to do is to buy. Okay, is to buy. This is the 4-hour time frame. Now when we go to the 1-hour time frame, what is happening on the 1-hour time frame? On a 1-hour time frame, we could see price is doing this swing high, swing low, swing high, swing low formations over here, meaning it is also bullish, right? So let's go down straight to the 15-minute time frame, right? So right now, let me put it for you. The 4-hour time frame and the 1-hour time frame, they are both bullish. Let's see what 15-minute time frame is saying. Now, 15-minute time frame is also obviously bullish, but then what is happening at the latter end over here? Price is consolidating. All right, price is currently consolidating. Now, one thing that I want you to understand is that the fact that all these 3 time frames are bullish, it's a good indication that price is going to continue buying. But then you don't want to jump in at an area where the price of an asset becomes so much expensive that when you buy it and you want to sell it later, you wouldn't gain any profit on it. So you actually want to wait for price to push down. All right, you want to wait for price to push down a little before you hop in to pick a trade. It's very simple, guys. You don't have to complicate this thing. It's very, 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 very simple. All right, it's very simple. What the summary of the whole thing is, the move, the trend that you see on a higher time frame, you have to make sure the same trade, the same trend or move is forming on a lower time frame before you pick a trade. Example, let's say, okay, let me see if my time is going to permit me before I do that. Okay, I have less than 3 minutes, guys. Okay, so I'm going to use a random portion of the charts. I just hope it helps me to explain whatever I want to explain quickly. So I'm going to use this side. Let me go to the 4-hour time frame and pick a place rather. Okay, so quickly I'm going to use this side. All right, this is the 4-hour time frame, and I'm using this particular area. All right, so whatever that is happening over here, you could see price is bullish, right? When we go to the 1-hour time frame, what do we see in that particular, level? We could see price is also bullish over here. Let's go straight to the 15-minute time frame. What do we see? What do we see over here? Now, what you could identify is that even though price was bullish all throughout to this level, this particular level, all right, I don't know if you can see my pointer on a higher time frame. When you come to the lower time frame, you realize that price has actually moved down over here like this before pushing up. But on the higher time frame, this move to the downside wasn't visible enough. So this move to the downside is what you will see on a lower time frame. When you come to the lower time frame, that is the move you are going to see. Example, even if you can see further, the move continue happening to the downside over here. All right, before price was able to finally break above this level right here. Breaking above this level over here makes price to continue with a buy. All right, it makes price to continue with a buy, such that it did not even come below this particular low that occurred over here. It makes price to keep buying, right? My time is actually up. Yeah, my time is actually up. So I think in the next video I'm going to explain more other things to you, and there's only one secret in that video that I'm going to share with you. It's an indicator that I use. Yes, an indicator to show you something on the chart, and that is the secret. Meaning, it's not every time that you have to be trading. All right, the indicator will show you when you have to trade and when you don't have to trade. All right, so yeah, that's going to be all for now. I'll probably see you in the next video. Right.